Oh, there is plenty of stuff to talk about this morning. I don't even hardly know where to begin. Oh, yes, I do. I know exactly where to begin. Something from Meta, not from Tesla this morning. Meta. I am shocked. I'm amazed. I'm thrilled. It's hard to express in words how big of a deal this is, but I'm going to do it from the Kobasi letter. It says breaking Facebook parent Meta to move trust and safety and content moderation teams from California to Texas. CEO Mark Zuckerberg said the move will build trust in a place where there's less concern about bias. This comes as Meta looks to restore free speech. Fox News adds this from Zuck's interview on Fox. Meta on Tuesday announced it will eliminate its third-party fact-checking program. Eliminate their third-party fact-checking program and implement a community notes model similar to the one that exists on Elon Musk's X. The company is also bringing back political content on its platforms and removing restrictions on subjects like immigration and gender. Are you speechless? Let me know in the comments below. This is the wildest thing I've seen. Zuck has fully consumed the red pill. It's people have been asking, is it real? Is this really, has he really moved over to the right? And this is proof. I mean, these are actions. Words are one thing, these are actions. Anyway, I don't know if there's any bigger news than this morning. NVIDIA and all of their stuff on last night seems to be second place by a long shot. Anyway, you will hear in a few minutes that there's plenty of good and not so good news about Tesla this morning. There's enough to justify either buying or selling. Now, the reality is that after I wrote that information down, the stock market collapsed. I mean, it just when I say collapsed, I mean the Dow down 55, the NASDAQ down 155, S&P down 22, Tesla down $11.50. Just go down the list. NVIDIA with their big show last night down 371. So don't know why. I tried to look around to see if there was any bad news. I'm going to give you all the news that I know about here in the next few minutes. Maybe something will pop up later. Maybe I'll have to do a special show in an hour or something because something really, really bad happened, but I'm not seeing it. So anyway, let's go ahead and look at the news. I will just say this, that Tesla, which is sitting right now at just a second, let me say it again here, sitting at 399.62. Go back to my notes. Keep in mind that at 399, Tesla is higher than anyone except for Brian Wang and me. Nobody else. We are the only two. Nobody else expected Tesla to be this high at this point. My 410 estimate and his 450 estimate were both expected after earnings, not before earnings. So I think we're still in pretty good shape at 399. And that's even after this big blow off this morning. So who knows? And again, I have no idea what's going on. If, as expected, Tesla has good margins and a bit of an earnings beat due to the Megapack sales, plus a positive Elon Musk in the call, I think that my estimates will hold. I continue to see the stock being range bound between 380 and 480 until the earnings call, and a chance of going to 500 after the call. Any bigger move, in my humble opinion, I know, will require some actual news. Now, what do I mean by actual news? If we are around the high end of that range, let's say we're at 480, 490, 460, even 460, 470. If we're at the high end of that move, when the Juniper comes out, I don't think it's going to move the market. Maybe a little bit, not very much. Now, if we're at the low end, if we're back down around this level now, 399 or 410 or 420, no, then when the Juniper comes out, assuming it looks great and et cetera, then yeah, I think it'll move the market back up towards the middle of the fours. All right. The street is out with this morning. Tesla is slated to post its detailed fourth quarter earnings at the close of trading on January 29th. We know that, with analysts looking for a bottom line of 72 cents. So, you know, the AJ is at 76. So that solves that. We were asking that question yesterday. Where is the street's number at 72? A share of revenue, 72 cents a share on revenue of 27.23 billion. Gross profit margins, meanwhile, are forecast to widen modestly to 18.85, according to LSEG data. So 18.85, that is without the credits. So therefore, that would be in line with what I've been saying and what Brian Wang has been saying. Bank of America analyst John Murphy, however, argues that Tesla's post-election rally pegs the stock at a level that captures much of our base case long-term potential from Core Auto's robotaxi Optimus and energy generation and storage. Remember, I told you that I thought Bank of America's note 2 months ago was the reason for the second leg of the rally, because they started talking about Optimus. And you can see that these guys get it, okay? John Murphy gets it. Now, John Murphy is saying, okay, I think it's captured. Oh, he's saying what I'm saying. Look at that. Murphy downgraded Tesla to neutral. I guess that's what I just said, right? He downgraded to neutral in a note published Tuesday, citing execution risks for the group's broader ambition, but boosted his price target by $90 to $4.90 a share to allow for last year's rally. Oh, he went to $4.90 a share. Well, look at that. Since our upgrade in April 2024, news flow and investor sentiment have shifted more positively, Murphy and his team wrote. Catalysts around future growth drivers have been more fully recognized, most notably for robotaxi. Well, okay, I couldn't agree with John Murphy more. I think he's nailed it again. This is 2 in a row where I think John Murphy is the best analyst on the street, better than even our friend Ives. Dan Ives is outstanding, excellent, but this is nailing it right, in my opinion. Robotaxis are key to Tesla outlook. In terms of upside potential, however, he cited the likely introduction of lower-priced EVs later this year, a move Musk has said would be pointless unless it was designed to be fully autonomous, as well as the launch of the group's new robotaxi. With the sizable cost advantages, Tesla's robotaxi service could offer rides at a much lower price to the consumer and still have higher margins, Murphy and his team wrote. Murphy also sees positive catalysts from the energy storage business and the ramp of production at its Shanghai Gigafactory, as well as updates on full self-driving tech that are planned for the rollout in major markets over the coming months. He added that a potential capital raise, which could help accelerate growth, is another potential share price driver. Don't see that. Going to have to disagree with Murphy on this one. Anyway, then here was from Canaccord analyst George I wish we'd go back to Smith and Brown and Jones. George Gianark, I should be able to pronounce that. This is via tip ranks this morning. These include Tesla's promise of new vehicle launches in 2025, which signals accelerating growth, with anticipated year-over-year volume increase of 20 to 30%, which is Elon's statement. Tough to be too negative on an accelerated growth story, says 𝐂𝐦𝐚𝐢𝐥, that Tesla should be one of those in 2025. Meanwhile, auto gross margins are stabilizing, with cost per vehicle hitting historic lows, and 𝐂𝐦𝐚𝐢𝐥 expects margins to improve in 2025. Then there's the advances being made in Tesla's full self-driving technology. While not flawless, users have been very enthusiastic about 13.2, potentially resulting in growing adoption and offering a boost of profitability. This is what I'm saying is probably not in the numbers that people are looking at for January 29th. Additionally, demand for storage remains robust, with an investment supercycle in energy infrastructure in the cards. Finally, Tesla's leadership in robotics positions us to capitalize on the fast-growing sector. He views 2025 as the year of the robot. Yes, indeed. And then from AJ, we have this. At present, judging based on available video evidence, Tesla is the undisputed leader in the technology tree, which offers both all the aspects of the robotaxi that are needed. There are others like Waymo, which show promise, but they fail to compete in the scalability challenge and for other reasons. This makes an Apple scenario where Tesla takes Apple's place higher, highly likely, highest margin earner with significant market share. So he's comparing it to when Apple first started out. In fact, even today, they don't make the most phones by a long shot. They are not the leader in the numbers, but they are by far the leader in the margins and the market share. He expects this to be true for Tesla as well across the board, but specifically in the robotaxi business. Also, he says, Tesla doesn't have to be a robotaxi leader in every market to generate significant incremental market cap, just like Apple never was in all the markets. It's enough to become a leader in North America and Europe since they are the highest margin markets. China is nice to have, but not required for a significant market cap. Yeah, we've looked at this already. The prices that you can charge in China or India or Malaysia, you can't charge. You are starting out at 50 cents, not at $2 per mile. And then from Investopedia, let's take a look at what the charts are telling us. To forecast a bullish price target and project how long the trending move may last before the stock consolidates, investors can use the bars pattern tool. I don't know, have any idea what that is, which analyzes prior trends to predict future moves. When applying that analysis to Tesla's chart, we take the price bars that comprise the stock's strong trend from October 2019 to February 2020 and reposition them from the November breakout. This forecasts a target of 745. Wow, look at that. And indicates the current move higher may last until March if price history rhymes. We select this prior trending move because it commenced following a weekly breakout of nearly 30% from a prior ascending triangle, closely mimicking the stock's current price action. They also say if the stock continues to retreat from its recent highs, investors should initially keep an eye on the 370 level, a location on the chart where the shares may find support near several peak positions just below the stock's early November 2021 top. Okay, so I'm calling 380, they're calling 370. People have talked about 360. There's all kinds of suggestions about where that bottom, where that support might be. They conclude by saying a close below this level, below 370, could see shares revisit lower support around 300. Investors may look to join the long-term uptrend in this area near the psychological round numbers and trend lines that link peaks in August and July last year. I know people that will start selling their homes to buy shares if it gets down to 300 again. Okay, this is Randy Kirk at Like. You know you liked what I just did there. Come on, hit. Have you subscribed yet? If you haven't subscribed yet, I really have. I have a question for you. Why not? And then notify. We've got regular stuff coming up today. We've got Nicholas Gibbs at around 5 o'clock, maybe a little after 5 o'clock, and then Brian White will be there with part 2 tonight at 7:45. Join Patreon. Yes, that would be lovely. We'd appreciate it. JOLTS, that is the job numbers, beats the number of job openings, beats with 8.1 million versus 7.8 expected. So that would be good news. This would be just about Goldilocks news, I would think. It's not like going up to, 8.5 or something. It's 8.1. It's in a positive direction. I would think the market would like this. The number of job openings now, that just happened, of course, at exactly 7 o'clock. So California time. So it may not have impacted the market yet. We'll take a look in just a few seconds. The number of job openings was little changed, it says here. That seems like a good change from 7.8 to 8.1. In the last business day of November, remember that's a month ago, the U.S. Bureau of Labor Statistics reported today. Over the month, hires and total separations were little changed. At 5.3 million hires, 5.1 million separations. And then within separations, quits, 3.1 million decreased. So fewer quits means people are happier in their job, but layoffs and maybe not thinking there's many jobs out there to go to. But layoffs and discharges, 1.8 million, changed little. This release includes estimates of the numbers and rates of job openings, hires, and separations from the total non-farm sector by industry. All right, then the trade deficit came out this morning. Also, it widened to 78.2 billion compared to a revised 73.6 billion. That's a pretty big jump in October and roughly in line with forecasts, however. Imports rose 3.4% to 3.5 billion, the biggest gain since March of 2022. Now, this is going to be really hard to reverse with such a strong dollar. One of the ways we can reverse it is with oil and natural gas exports, and that, of course, is what Trump intends to do. Okay, then we got the services sector reporting this morning. Economic activity in the services sector expanded for the sixth consecutive month in December, according to the purchasing and supply executives, as reported by ISM. They registered 54.1%, indicating expansion for the 52nd time in 55 months, just the opposite of manufacturing. The supplier deliveries index registered 52.1%, 3 points higher than 49.5 in November. The index returned to expansion territory, indicating slower supplier delivery performance to split the year with 6 months each in expansion and contraction. They say that supplier deliveries is the only ISM report on business index that is inversed, meaning a reading above 50% indicates slower deliveries. But that's typical as the economy improves and customer demand increases. Now, this is, again, good news, good news. The market should be happy with this. The prices index registers 64.4% December, a 6.2% increase from November's reading. This month's reading, for the first time, the index has registered over 60. So that suggests prices going up. Inventories index stayed in contraction. Okay. According to this in December, the services PMI was boosted primarily by strength in business activity and supplier deliveries. Many industries noted that end of the year and seasonal factors were helping drive business activity. Okay. General optimism expressed across many industries, but tariff concerns are still there. Okay, they have some commentary at the end of this report all the time, which is commonly very interesting. So let's go through this real quick. Preparations are underway to diversify supply in the anticipation of tariffs. Number 2, new residential construction remains hampered by interest rates and affordability issues. Tariff threats also impacting suppliers in that area. Number 3, moving work offshore to save costs, according to one. That's interesting. Number 4, continued shortages of IV solutions have resulted in some cases being canceled and or delayed in the healthcare industry. Number 5, generally optimistic about the incoming administration will positively affect regulatory, tax, and energy policies. We're concerned, though, about tariffs. Number 6, inflation levels seem to be increasing, thus dimming hopes of interest rate cuts. That's from the scientific sector. Number 7, overall activity slightly higher than planned. That's from retail trade. Number 8, seems to be a lot of uncertainty about tariffs, according to the transportation and warehousing portion. Number 9, general business conditions are still going well. The end of 2024 is approaching, so end of the year preps are in full swing. That is from utilities. And finally, customers are slowing down and they are cutting back their inventories and prep for the end of the year from the wholesale people. So yeah, that's normal. You always, after you get your Christmas stuff done, then you're like, no, I'm not buying back in until February, March. Okay, let's take a look at how markets are reacting to all this good news. I mean, all of that is fantastic, and yet the markets were really slammed earlier. Okay, the Dow, which was way up this morning, went slightly down, has now perked back up above 50. You see, the good news has impacted it. Now, the NASDAQ, on the other hand, which went down, is continuing down, and it's down 210. I don't get it. S&P, down 23. It is flat. It is down. It was up, but it's down, and now it's going flat. So all 3 of those indices are going completely different from one another. That's a little weird. Tesla is now down 17 at 394. Again, I would not be shocked if we test 389, 390. I'm sorry, 380 rather, 379, 380. Very likely. Or it could completely turn around, and 15 minutes from now, it could be back at 410. Apple is barely down. Google, pretty much now the Mag 7, well, that's not true. So Amazon down 4. Let's look at percentages here. Let me go back and do the percentages. So we've got the Dow down 0.11, I mean, sorry, up 0.11, the NASDAQ down 1.24, S&P down 0.44, Tesla down 4.36. That is more than you would expect given the NASDAQ's numbers. You got Apple flat, you've got Google down, I mean, up rather, 0.38, Amazon up almost 2%, Meta up 3%, Microsoft flat, and NVIDIA down 4.5%, more than Tesla after what a lot of people thought was a pretty good speech last night. Now, NVIDIA was way up. Tesla was way up. Not obviously it was way up and it has come way down, but I'm just saying both of those are probably not shocking given what's happened in the last couple of months. All right, Cathie Wood stocks basically were all up a few minutes ago, now are mostly down. So yeah, the market completely switched over the last little bit. All right, let's go find out what's happening with bonds. 10-year bond is, okay, well, here's part of the problem. What in the world? So the bond market is looking at all this good news. What are they looking at? They're looking at, oh, the market, the business is good. So what do we got? We got the 10-year up 6.3 basis points at 4.679. Will we literally go up and test 5? I don't know. It could happen within the next 2 weeks as we're waiting for Musk and Trump and Vivek to start getting hopefully some concrete evidence that, and Congress, we need Congress to be part of this deal. We need to be able to see that everybody's on the same page about cutting the spending by the federal government. The 2-year is up 2.7 basis points. The 1 month actually is flat. Okay, let's go ahead and look at oil. Last time I looked, it was up. We've got oil actually up another half a buck, 62 cents actually at 74.18, with Brent at 77. Natural gas down a little bit this morning, 2.91%, 3.565. You've got gold popping up, but not as much as it was earlier, 2.664, almost 2.665. Back to that number for gold again. It seems to like to play right in that area. And we've got silver up 68 cents, $30.79. We've got copper up 0.74%, $4.19. All right, the dollar mixed this morning, but at very high levels, as you know. We have got Bitcoin falling 4,075 right now, 4,162 just changed at 97,984. So there you go. What a morning, eh? I still say the number one news of the day is what Meta has done, what Zuckerberg has done, giving more credence to the fact that Elon Musk is ahead of the game. He is making the news. He is impacting the zeitgeist like no other person in the world right now. To have Zuck make this massive switch is really, really amazing to behold. Okay, so later on today, we will talk more about this. I'm sure that we will have a lot of information, a lot of interest and concern about this from Nicholas later today. Gibbs will be very interested in this, so you'll want to come around to hear that. And then finally, Brian White at 7:45. Again, I'll do a special report later this morning if I see something that is really impacting. But we're continuing to see the NASDAQ go down. Now the S&P is drifting lower again. The Dow is drifting lower again, and Tesla is now down 18.22 at 393. So there you go. We'll close it up right there. Oh, last night, Brian White, be sure to take a look. Actually, I'm going to put both up. Larry Goldberg and I had a phenomenal, one of our best ever. If you didn't watch Larry Goldberg and I last night, watch that. I'll put both up, both Larry and the Brian White. Check those cards out. Okay, that's all I got for you right now. It has been great talking to you.